This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, September 4th, 2015. Euro dollar. So the euro remains locked within a downtrend, a medium-term downtrend, and the latest setbacks after that off that 17.15 high that we saw several days back suggest that we could be seeing a medium-term lower top in favor of the next downside extension below recent support from the 20th of July at 108.09, which guards against that critical yearly and multi-year low from back in March at 104.62. The breakdown that we saw in Thursday trade below recent short-term support in the 11.55 area paves the way for fresh downside now, potentially back down towards 108.09. At this point, only a break back above recent highs that we saw around 113.33 would compromise or take the immediate pressure off the downside. Sterling dollar. So cable has been under pressure significantly over the past several sessions, and since breaking down below the 200-day SMA, the market is now focused on a retest of that next critical support in the form of that low that we saw going back to the 1st of June at 51.70. A break below 51.70 would then expose psychological barriers at 150 further down. At this point, we need to see a break back above 155 to take the immediate pressure off the downside. Dollar yen. So dollar yen has been consolidating in recent trade, but the market is looking to maybe put in a lower top at 121.74 in favor of a fresh downside extension or resumption of declines back down towards that recent low that we saw, that violent low that we saw the other week at 116.12. At this point, only a break and close back above 121.74 would take the pressure off the downside. Euro Swiss. So Euro Swiss has been consolidating over the past several sessions, though the market remains locked within a recovery outlook, a recovery structure, which continues to favor the top side. At this point, fresh upside is seen beyond 109.62 and towards psychological barriers at 110, above which exposes the 115 area further up. At this point, any setback should be very well supported, with only a break back below 107 to compromise the immediate bullish outlook. Aussie dollar. So Aussie remains locked within a well-defined downtrend, and the market is consolidating just off recent lows below 70 and is poised, though, for fresh setbacks. At this point, any rallies are viewed as corrective, with only a break back above 74.40 to really compromise the bearish outlook. Next key downside objective comes in by a measured move at 68.30. Dollar CAD. So dollar CAD has been very well bid over the past several months, with the market clearly locked within a well-defined uptrend and trading to fresh 11-year highs at 33.54 thus far. Setback should be very well supported, with a higher low sought out in favor of the next upside extension towards psychological barriers at 135. Really, any setbacks should be very well supported, with only a break back below 128.60, that low going back to the 29th of July, to compromise the bullish outlook. Kiwi dollar. Kiwi remains locked within a well-defined downtrend, and the market is now focused on potentially putting in a lower top ahead of the next downside extension below that spike low that we saw the other week at 61.30. That was a multi-year low. Rally should be very well capped, with only a break back above 67.40 to compromise the bearish outlook. SPX 500. The S&P 500 continues to show signs of major topping, with the market trading down recently to fresh multi-month lows at just shy of 1800 in the 1830 area. At this point, a lower top is sought out around 2000 in favor of a resumption of declines back down towards and eventually below 1819, which represents a low going back to October of 2014. Gold. So gold has been recovering nicely over the past several sessions since breaking down to fresh multi-year lows below 1100. At this point, the recovery has stalled out by 1170, but a higher low is now sought out somewhere above 1100 in favor of the next upside extension towards medium-term resistance at 1233. Only a daily close back below 1100 would compromise the newly adopted recovery outlook for gold.